Very good morning. Good morning. Warm welcome, Vishal, Nagaraja Nayak, Hariharan, Damodaran. Very good morning. Warm welcome, Ravinder. Yes, very good morning. Is my audio and video clear? Just type AC if audio and video is clear. Type AC if audio and video is clear. Kanhu Charan, Nagaraja Nayak, Ravinder, Srirani, Vishal Sahu, Dharmana Jairam, Arun Singh, Mohit. Type AC if audio and video is clear. Type AC if audio and video is clear, just for my confirmation. Are you able to see the chat section? Type AC if audio and video is clear. I think the chat option is not enabled for you guys. Just a moment, I'm just looking into it. Okay, I'm seeing chat is disabled. Okay, I'm also looking into that. Just give me a moment. Okay, in Q&A, you can put your comments. Are you able to see my message? I said type AC. Type AC, so you can put that in Q&A. Okay, so I think there is some technical issue with the chat. So instead of chat, we will converse through Q&A. Okay, because normally there will be an option where we can enable. Okay, okay. Now I am enabling the chat. Can you please see the chat section now? Type AC in the chat section. Yes. Okay. Okay. Now the chat section is enabled. Yes. Thank you so much. Thanks for that confirmation. Yeah. Thank you, Anurag. Warm welcome, Anurag Singh, Arun Singh, Ashu, Dharmana Jairam, Durga Srinivas, Hariharan, Kanhu, Manasi, Mithran, Rohit, Nagaraja Nayak, Prashant Singh, Ravinder, Sheikh Jafar Hussain, Srirani, Sujan, Vishal. Okay, very good morning. Good morning, all of you. Now the time is 11:03. We have 2 more minutes. Kindly introduce yourself. I mean, we'll start the session by 11:05. Kindly introduce yourself from where you are attending the session. Mention the name of the bank or organization you are associated with. Kindly introduce yourself from where you are attending the session. Mention the name of the bank or organization you are associated with. Yes, Ashu from Central Bank of India. And Anurag, currently working in Bank of Baroda. Ashu, okay, attending for the first time. Warm welcome. Nagarag Nayak from Karnataka, consultant. Warm welcome. Mohit, consultant from Hyderabad. Warm welcome. So others, kindly introduce yourself from where you are attending the session. Mention the name of the bank or organization you are associated with. Ravinder, good morning. Working in Union Bank of India, currently posted in Raipur, Chhattisgarh. Warm welcome, Ravinder. Siddhartha Bank. Who is that? Sujan. Sujan from Nepal. Warm welcome, Sujan. And Miji, I believe Jeevan. Jeevan, good morning. Warm welcome. Anurag from Lucknow, attending for the first time. Warm welcome. Okay, now the time is 11:05. I think it's time for us to get started. But others, kindly introduce yourself. Jitendra Kumar from Union Bank of India. Vishal from Mumbai, working in finance department at Bharat Wire Ropes Limited. Wow. Dharmana from Visakhapatnam, working as senior accountant in Kisan Craft Limited. Welcome. Kanhu working as private sector as accounts manager. Warm welcome. So today I think we have mix of audience. We have bankers as well as finance executives, accounting professionals. Sunita from Indian Overseas Bank. Warm welcome, Sunita. Okay. Without further delay, let's make a jump. Let me open my presentation screen. I just want you to confirm whether the screen is visible. Just give me a moment. I'll share my presentation screen. Just let me know whether you are able to see that blue screen. Yes. Are you able to see this blue screen? Prashant from Nagpur, consultant. Yes. Are you guys able to see this blue screen? Yes. Okay, wonderful. Without further delay, let's make a quick jump into our topic. This session, the 11 a.m. session, is reserved for discussion on financial ratio analysis. Financial ratio analysis. I see many of you are bankers and some of you are finance executives, professionals. So it is very important that you guys have 360-degree view of the business. Yes, as a banker, you should have 360-degree view of your borrower business entities. Only then you will be able to take a clear lending decision. And as a finance executive, finance professional, as an accountant, you should have 360-degree view of your own organization. Only then you will know in what shape your organization is, in what direction it is going ahead. Okay. And for that only we make use of financial analysis tools. And in that, financial ratio analysis is a very powerful tool. Very powerful tool. It will literally give you 360-degree view of a business. And with that, easily you will be able to capture this strength, weakness, opportunities, and threats related to your business. Okay. That's why banks, they significantly make use of financial ratio analysis. Investors, they make use of financial ratio analysis. Finance executives, finance professionals, CFOs, they make use of financial ratio analysis. And of course, business owners who are really serious about business numbers, they make use of financial ratio analysis. And that's what you are going to learn today. Okay. So I can assure you the next 60 to 90 minutes, next 60 to 90 minutes will be the most valuable time you are going to invest today, and you will have a lot of takeaway. So I want you to stay hooked to the session. Please have your notepad and pen so you can take note of significant discussions. Okay, right. Before we make a deep dive, just give me 1 minute time because some of you are attending the session for the first time. So let me briefly introduce myself in a matter of 1 minute. I'm CA N Raja, a chartered accountant by qualification, a teacher, trainer by passion. I started my career as a banker with State Bank of India, where I joined as credit analyst and in very short period got elevated as team leader credit processing cell in mid corporate group. There, I had opportunity to work on loan ticket sizes starting from 10 crore, ranging up to 500 crore. I worked here for a period of 4 years, handled 250 plus projects, almost like 5,000 crore plus size. After 4 years stint, I came out and started my CA practice. During practice also, I focused on project finance and debt syndication as my core practice areas. Parallelly, I took up teaching assignments also. I used to teach financial management and strategic financial management for students of professional courses like CA, CMA, CS. I also regularly conduct training program for banking and finance professionals on the areas like working capital, term loan, financial analysis. I'm also an empaneled faculty of Tamil Nadu Chamber of Commerce and Industries. I train business owners on financial management areas, and I also teach through online platform like this. Thanks to technology, as of today, we have 3 lakh plus learners across 180 plus countries learning banking, credit, finance, accounting, costing, and so on. Okay, so this is all about me. Now let's make a deep dive into our core discussion, which is financial ratio analysis. And to get started, let me make use of this example. Let's say there are two companies in front of you. There are two companies in front of you, company A and company B. Company A has reported a profit of 5 crore and company B has reported a profit of 10 crore. Now I have one simple question to all of you. You just have to answer that. Which company looks more profitable or which company looks more efficient here? Which company looks more profitable or which company looks more efficient? Can you answer? Is it A or B? Vishal believes it is company B. Kanhu also believes it is B. Okay. Others, please participate. You just have to tell me, is it A or B? Shivakumar believes it is B. Okay. Yeah. What about others? Kindly participate. See, you are spending your valuable Sunday time, your family time, your precious time, your leisure time in the session means you should take home something, right? So participate. You will get the best. Yeah. Manish, Nagaraja are saying it's B. Sagar is saying A. Jeevan not in a position to judge because Jeevan has attended the session already. Sujan believes it is B. Anurag is not in a position to say. Jitendra believes the data itself is incomplete. How you can expect me to answer? So that's the point of Jitendra Kumar. And Shweta needs more information. Mogana Veera Kumar is saying it's dependent on the investment. And Chandan Paul says we have to analyze a little more deeper, only then we can come to a conclusion. Okay. So what I could see is, based on the responses, many of you said the B is efficient, or many of you said you need more information. Many of you said B is efficient, or you said you need more information. I think I saw only one person answering in favor of A. Okay, so I respect this. Whoever said B, obviously you will say B only because 10 crore is better than 5 crore. So I don't see anything wrong. But your way of decision making is what concerning me. Because now you have taken a decision just by looking at a raw data called profit. Just by looking at profit, you are taking a decision on profitability or efficiency of the business. That's not how it should be done. Then how it should be done? You should ask for more information. Yes, many of you asked for more information because somehow or somewhere you felt that you cannot conclude or you cannot comment just by looking at profit. You need some more information. Got it? You need some more information. Here you cannot decide now. You have to analyze deeper, like Chandan indicated. You have to analyze deeper. It means if you are provided with some additional information, I believe you will be able to take a better decision. So let me give you one more additional piece of information, that is sales achieved by these companies. Company A has achieved a sales of 20 crore. Company B has achieved a sales of 100 crore. Now let me repeat the question, which company is more profitable or which company is more efficient here? Please tell me. Please tell me. Is it A or B? Okay, Jeevan now has an answer because earlier Jeevan said can't take a decision. Now Jeevan is saying it's company A. Anurag, yeah, Anurag also I think earlier said can't take a decision. Now Anurag Singh is also saying it's company A. What about others? Come on, guys. Just say A or B. Moganavira Kumar. Moganavira Kumar, I think you wanted information on investment. Now I have given you sales, and I could see answers coming from Sunita, Dharmana, Nagaraja, Ashu, Durga Srinivas, Shivakumar, Prasant Singh. Wonderful. So answers are pouring in support of A. Okay, so what happened? What made you to shift from B or seeking more information to A? I think knowingly or unknowingly, you did one analysis. What is that analysis? You compared the profit with sales. You compared the profit with sales. When you compared the profit with sales, you realized that company A is making a profit of 5 crore out of 20 crore. It means company A is making 25% profit margin Whereas company B is making only 10 crore out of 100 crore. It is making only 10% profit margin. It means the profit margin of company A in percentage terms is better than the profit margin of B. So what does that mean? If company is A is making a sales of 1 rupee, the profit made by the company A will be 25 paise. So for every 1 rupee sale, they'll be making 25 paise profit. But if company B is making a sale of 1 rupee, they'll make only 10 paise profit. So that automatically sends us the message that if profit is 25 paise or 25 percentage, then cost is 75 percentage for A. And if 10 paise or 10 percentage is the profit, then cost is 90 percentage for B. Okay. In terms of cost. So now I think we are having a even better, finer picture on the profitability and efficiency parameter. The company which is able to control the cost, keep the cost at a lesser level, will be able to report better profit. The company which is unable to control the cost will have very thin profit margin. And that's the difference between company A and B here. Earlier, when I asked you to take a decision just by looking at the profit, you were either unable to take a decision or your decision favored B. But when I gave you one more piece of information, that is sales, then you came out with a better decision, that is company A is more efficient or more profitable here because they are able to report a 25 percentage profit margin and keep their cost at 75 percentage. All these are made possible because we compared two numbers, and using that, we created a financial metric called profit margin or profitability, which is nothing but a financial ratio. Here, the financial ratio is expressed in percentage form. And when you derived this financial ratio, what happened? You got better information, is it not? Earlier, this information is lopsided. But when you derived it as a ratio, you have better information on your hand. And because of that better information, you are now in a position to take what is known as meaningful decision. Is it not? Now you have taken a meaningful decision. Earlier, the decision was biased or lopsided. But now you have better information, you have analyzed them, so you are able to take a meaningful decision. This is the very purpose of doing financial ratio analysis. Very purpose to have better information on hand so you can take meaningful economic and financial decision. That's why banks, financial institutions, investors, analysts, decision makers, stakeholders, CFOs are making wide use of financial ratios. You will get 360-degree view of a business. And this is one simple example to show how powerful the financial ratios are. And this is the way in which we are going to continue the session today. Already we have spent around 15 minutes now. This is the way, or this is my teaching style. This is how I teach. I write, I scribble. I'll take you to the old school days. And how many of you are ready to learn in this style, in this model with me today and in future? If you're ready, just type ready. Just type ready. I mean, if you are able to connect yourself with this teaching style, if you're able to follow this, if you are able to go back to your school days and become like that old meticulous student, ready to learn everything, type ready. Type ready. Yes. Wonderful. Wonderful. I could see so many of you are so eager and ready. Right. Let's proceed further. Now, these financial ratios we can classify into various types. Okay. The financial ratios can be classified into various types. I'll broadly categorize them into 5 types. We have capital structure ratios. We have liquidity focused ratios. We have profitability focused ratios. We have efficiency focused ratios. We also have coverage focused ratios. What we discussed now is one of the discussion under profitability. But there are five classifications. In this classification, if you ask me which is the most important one, I would say number one for capital structure ratios, number two for liquidity ratios, profitability, efficiency, coverage all comes under almost three because they are all linked with profitability. Okay. So I would say profitability, efficiency, coverage all come in rank number three. So profitability, most of us will be aware of because it is more of common sense. Here, even without any knowledge of ratios, you have calculated profit margin, right? So profitability is something you and me or anyone can be aware of, or without any teaching, they'll be aware of. But what most are unaware of is capital structure ratios and liquidity ratios. And unfortunately, they have rank number one and rank number two. Businesses which fail in capital structure, businesses which fail in liquidity will collapse even if that business is having good profitability, efficiency, coverage. Okay. So capital structure is the core, liquidity is survival, and these are supporting. If these supporting factors are there, but if these two are not there, then that business cannot survive, that business cannot grow. Okay. So in that context, these two are really, really important. And in this session, I will take you through this capital structure analysis first. Okay. For that, we will have a small game. We will have a small game. I'm going to draw a balance sheet of a company. I'm going to draw a balance sheet of a company. I want to put down the items into this balance sheet. I hope you know what is balance sheet. Balance sheet is a statement that will show from where money has come into the business and where that money has been deployed. Okay. Technically, we say the sources and uses, but legally, we will not use the term sources and uses. Legally, we will say instead of sources, we will say equity and liabilities. Okay. Instead of sources, we will say equity and liabilities. Instead of uses, we will say non-current assets and current assets and current assets. Is that clear? Okay. For those who do not know what is this equity, what is this liability, non-current, current, just listen. I'll give you a quick intro. I told you in business, money can come from equity and liability. That is, we are classifying the sources into two type, equity and liability. Liability means it is repayable. Means what? It is actually going to come from outsiders. Equity means it is also repayable only. But who is having claim on equity? It is owner's money. Equity means owner's money. Liability means what? Outsider's money. Simple. Okay. Then on the user side, that is on the asset side, we had the classification as current asset and non-current asset. What is current asset? These are all the assets which you can convert into cash within a period of 1 year. What is non-current asset? These are all the assets which are purchased with an intention of long-term use. It means you will be using it for more than 1 year. So any asset which will be converted into cash within a period of 1 year is called as current asset. Any asset which you are going to use it for more than 1 year is called as non-current asset, meaning if you try to sell those assets and convert into cash, it will normally take more than 1 year. Okay. So that's what you see here. Sources, equity, and liability. Uses, non-current, current. Okay. Now comes the real game. Maybe I'll take a copy of this page. Yeah. Okay. I will list out some items. you have to answer me whether it is an equity or liability. If you believe it is equity, you have to comment EQ. And if you believe it is outside a liability, okay, it is outside a liability. If you believe it is outside liability, you have to comment OL. So this is the game. Ready? Yeah. So let me write down first. Let me write down. Let's say this business has purchased goods on credit. So they have purchased from creditors, trade creditors. Okay. They have purchased goods on trade on credit basis. It means the amount is not paid immediately. It will be paid later. The amount is around 10 crore. So where we have to park it? Under EQ or under OL? EQ or OL? This should go to outside liability. So I'll put that here. Okay. This should go to outside liability. Maybe I'll write here outside liabilities. And this is equity. Okay. All of you, please, all of you participate because this participation will be in your memory for a very long time. And you have long way to go in your career, right? So set your foundation really strong. Okay. So trade credit will come under outside liability. The next question. This business has share capital of again 10 crore. So share capital, who will give the share capital? Who will contribute to share capital? Owners. Owners contribute to share capital. So you can take it to equity. You can take it to equity. Good. I'm saying many of you are participating. Good. Then this business has taken a cash credit. Cash credit of 15 crore. Cash credit of 15 crore. So where will you park this? Cash credit. Sivakumar, cash credit. It is a liability. It is an outside liability. Okay. It is an outside liability. Good. Yeah. Then this business has retained lots of profits and they are calling it as reserves and surplus. Reserves and surplus. That's around 15 crore. So if any profits are retained, who will have claim on the profits? It's basically the owners, right? So reserves and surplus should go to equity. It should go to equity. Okay. So let me put them here. Yeah. Then this business also has some term loan. They have raised term loan of 25 crore. Please tell me. Term loan of 25 crore. It has come from outsiders. Okay. So this should come under outside liability. Okay. Fine. So now the capital is easily structured. The capital is easily structured. You see, in this business, the capital has come from owners, capital has come from outsiders. See, when I say capital, look at it with a broader perspective. Capital means the money that has come into the business. In this business, money has come from two sources, one from equity, two from outsiders. How that is structured, that analysis is what we call as capital structure analysis. Okay. So now what we can see in this business, owners themselves have contributed 25 crore. Outsiders have contributed 25 plus 10 plus 15, 50 crore. So the overall funds that have come into the business is around 75 crore. If 75 crore of funds have come into the business, then there will be corresponding 75 crore worth assets. So now we have to identify where they have invested this 75 crore assets. Okay. So let me list down. Let me list out the items. You have to tell me where we have to park. That is, I'm going to list out the items. You have to tell me whether we have to park them under current asset or under non-current asset. Okay, simple. Okay. First, the company has invested in inventory around, let's say, 15 crore. Inventory 15 crore. So where we can park this? Okay, it should be under current asset because this inventory can be converted into cash within a period of 1 year. Okay. Now this business has also invested in land. They have invested in building. They have invested in plant and machinery. Where we can park them? These items are purchased with an intention of long-term use, so they should be ideally parked under non-current asset. They should be parked under non-current asset. Okay. Next, this business has invested in customers. That is, they have given credit sales. They have made credit sales, so the amount is yet to be received from the customers. That is around, let's say, 25 crore, around 25 crore. So where we can park this debtors? It should go to current asset. It should go to current asset. Okay. Then tell me, this business has made some investment in another company, investment in Y Limited. Okay. And this Y Limited is a company which is controlled by, let's say, the name of the main company is X Limited. It is controlled by X Limited. The board of directors of Y Limited is appointed by X Limited. The operational decisions are taken by X Limited, and Y Limited is having more than 51% shareholding. Okay. So this investment in Y Limited, you see it as short-term investment just to sell it tomorrow, or you see this as a long-term investment? Is it a short-term investment or long-term investment? They've invested in Y Limited. They are controlling the company. The board of directors are decided by them. Operational decisions are taken by them. They have more than 51%. It means this is a long-term investment. So this long-term investment we will call as SI. It is called a strategic investment. Okay. So any strategic investments made should come under non-current asset. Any strategic investment should come under non-current asset. Okay, good. I could see many of you have answered that. And one more. This company has invested in software. They have invested in software. This software, let's say they have invested in some ERP, which they believe will streamline the process of the business and it will help them in the long run. So where we can park this? Obviously under non-current asset. Now tell me, this software, whether it is a tangible asset, TA, or is it an intangible asset, IA? Is it a tangible asset or intangible asset? It is an intangible asset. Okay, you cannot touch and feel and all. So they have also invested in intangible asset. In this case, it is software. Fine. Now I'm not giving numbers for any of this, but we have the current asset, which is 15 plus 25, 40 crore. So their total current asset, that is inventory and debtors, which is around 40 crore. And they have so much of non-current asset, which is land, building, machinery, strategic investment in Y Limited, and intangible asset. Okay. So I'll just say non-current asset. Obviously, it should be balance 35 crore. 35 crore. Okay. Now, this is the balance sheet of the company, and we are going to understand the capital structure analysis through this only. Fine. So, what we'll do, sorry, let me just make it a little closer. Okay. So, from here, we will start our analysis. Capital structure analysis. Look at the capital structure of this business. Already I have showed you. This business has capital from two sources. One is equity, the other one is outside liability. Simple. So our capital structure analysis is going to be analyzing this outside liability and equity. So they have outside liability. They also have equity. So if you analyze this structure, you will be able to frame a picture about capital structure of the business. So look at their outside liability. So what is their total outside liability? It is 25 plus 10 plus 15. So they have an outside liability of 50 crore. And look at their equity. It is 10 plus 15. They have equity of 25 crore. Simple. So in capital structure analysis, what we will do is we will simply compare this outside liability with the equity. That is 50 crore will be compared with 25 crore. 50 crore, which is outside liability, is compared with the equity of 25 crore. And what you are going to get is 50 by 25, and it is 2. And mathematically, we will express this as 2 is to 1. Mathematically, we will express this as 2 is to 1. It means we got the capital structure ratio for this business. Yes, the capital structure ratio for this business at this juncture is understood to be 2 is to 1. What does that mean? For every 1 rupee contributed by the owners in this business, there is an outside borrowing. There is an outside borrowing of 2 rupees. Are you able to see this? For every 1 rupee contributed by the owners in this business, there is an outside borrowing of 2 rupees. It means whenever this business is raising 1 rupee from the owner, it will borrow 2 rupees from outsider. So, whenever this business is mobilizing 3 rupees, what is happening? 2 out of 3, 2/3 is coming from outsiders, and 1 out of 3, that is 1/3, is coming from owners. I repeat, whenever this business is mobilizing 1 rupee from owner, it is borrowing 2 rupees from outsiders. So, whenever it arranges overall 3 rupee, for that 2/3 is coming from outsiders, and 1/3 is coming from owners. So what does that mean? This business is 67% dependent on outsiders' money, and 33% is what owners are actually contributing in this business. Are you able to see this picture now? You got the pulse of the business. You got the pulse, like how this business is now funded. Just by looking at the ratio of 2 is to 1, now you can say this business is now run. A business with an asset base of 75 crore. You can say, just by looking at this ratio, you can say this business is run 67% with the support of outsiders' money only. And what owners have invested in the business is only 1/3, which is 33%. It means now you got the pulse of how the business is running, who is funding, who has more stake, who have invested more, and who is the real fund contributor. Are you able to get this big picture of the business? Just type BP. And if you are a banker, if you are a financier, if you are a lender, this is the first and foremost picture you have to look into. Who is funding the business? Whether the business is funded substantially by the owners, or is it substantially dependent on outsiders? If you are able to get that big picture, just type BP. Just type BP. But this is just the basic. I'm going to unfold a lot. So at this juncture, see, now if you look at the outside picture of this company, it's a massive company with 75 crore asset. But now you have the finer picture that out of 75 crore, 67%, meaning 50 crore is contributed by outsiders, and out of 75 crore, only 1/3, that is only 33% is what contributed by the owners. This is the most important picture. Okay. But let me tell you, we have just scratched the surface. We are yet to go deeper into capital structure analysis. What we have done is just unboxing number one. Unboxing number one. We have just touched the surface, scratched the surface. Let's go little deeper and understand whether this is true. We have to understand whether this is true. We have to understand whether owners are contributing 33% and whether the business is dependent on outsiders for 67%. Is it exactly like 67/33, or is it camouflaged? Is it masked, or is it window dressed, or is it a manipulated number? So if you want to know all those, you have to dig deeper. And why we have to know whether all this masking or manipulation is done? Because I told you, no, this is the number one parameter, because this only will decide in most of the banks. It is this capital structure that will decide the credit risk rating of the borrower. This will decide the ranking of the borrower. This will decide the loan interest rate substantially. This will decide the loan amount in a significant way. This will even decide the sanctioning authority, that is, who should sanction the loan, whether the manager or the committee or the top board. Okay, so in all those angles, this is very important. So what we have done now is only scratching the surface, which is unboxing number one. I'll take you through to unboxing number two, where you will be stunned to know that what we have seen is not real. It's just the basic. Okay. So what is that? What is that? What is that secret I'm trying to reveal here? I'm going to call that as unboxing number two. It means the same balance sheet, the same company, but I'm going to take some data out. What is that? See, I told you this non-current asset of 35 crore includes land also. Did I? I told you, right? Okay. Now, when I studied the balance sheet further, when I read the annual report, when I read the notes to accounts, I noticed this. This land is shown at 7 crore in the balance sheet. But this land was originally purchased only for 2 crore. It means the original cost is 2 crore, but the value at which it is shown in the balance sheet is 7 crore. It means artificially the value of the land in the balance sheet has increased by 5 crore. So is it a manipulation? I mean, did they manipulated the number, altered the figures? Answer is no. They did this legally. They did this legally. What? Is it first of all possible? Yes, it is possible. When and how? See, they purchased this land sometime back for 2 crore. At the time, they paid 2 crore. But today, they believe the valuation of the property has increased. That land can be sold in the market for 7 crore. So, this is their belief. So, what they did, they engaged a valuer. They got a valuation report, and valuer also said, yes, this land is worth 7 crore. So, keeping that valuation report as a base, they went and altered the value of the land in their balance sheet by adding another 5 crore. So the balance sheet on the right hand side had the land only at 2 crore. Okay. It had only at around 2 crore, but now they have added 5 crore and they are claiming the value of the land is 7 crore. But the question is whether they paid any money to anyone. No. Then how come they have added this 5 crore? They have added this 5 crore only on the basis of the report they have received from the valuer. It means if they have not added that 5 crore, this would have been 30 crore, this would have been 70 crore. Okay. It means this side also it would have been 70 crore. So what is the effect? They have added 5 crore here. They have added 5 crore here. They have added 5 crore here. It means somewhere inside also they have added 5 crore. I'll tell you where they have added that 5 crore. When they added 5 crore here to compensate, to balance, to tally, they have added 5 crore under reserves and surplus. It means they have created a new reserve called revaluation reserve. On one side, they have increased the value of the asset in the name of revaluation gain. And to balance the balance sheet on the other side, they have added a new reserve called revaluation reserve, RR. So in this way, balance sheet also tallied. Okay. But my question to all of you is whether the company has paid or received any money, whether they have paid or received this 5 crore from anyone? Say yes or no. Okay. Also, just tell me whether this 5 crore is real or it is only an opinion now. Is it real or only an estimate? Is it real or only an estimate? Opinion or estimate? Right? It is not real. It is either an opinion or it is an estimate. That's it. So, what the banks and financial institutions will say is, hey, you want to change the number, you want to increase the value of the land 5 crore, you do. But in our analysis, we cannot consider that 5 crore because you did that analysis for your purpose, but we cannot consider it. We can consider that 5 crore if you had paid for it. If you had paid 7 crore and purchased the land at 7 crore, we will consider it at 7 crore. But you paid only 2 crore. Now today you are saying the value has increased by 5 crore. And tomorrow you will say the value has increased to 10 crore. And after that you will say the value has come down. So we are not for the game. Whatever the revaluation game you are playing, it's only for you. We are not going to consider. That is the standpoint of most of the banks and financial institutions across the world. So what they will do, whenever they see there is a revaluation, in this case 5 crore, they will ignore. It means the side effect is that 5 crore which was added here also got to be ignored. Yes or no? If this 5 crore is ignored, then the balancing effect of 5 crore should also be ignored. And that is what going to cause a trouble for us. What is the trouble? Just few minutes back, we calculated the equity as 25 crore, which is nothing but this 10 plus 15. But now we have realized that this 15 includes artificially added 5 crore. It means it's time for us to kick out that 5 crore which is artificially loaded inside in the name of revaluation reserve. So if I kick out that 5 crore, what will happen? This 15 will become 10 crore. And our understanding of equity will undergo a change, because from 25 crore, if you deduct 5 crore, the equity will become 20 crore. Okay, it's time for us to change the equity as 20 crore. So are you ready? If yes, can you please type 20? Can you please type 20? So I will go and modify the equity. I will go and modify the equity. If you have got the concept, type 20. I will go and modify it. Yes, okay. It's time for us to modify that. So what I'll do, I'll say equity. The equity is 25 crore, but from that 25 crore, let us deduct 5. So what we will have is only 20 crore. What we will have is only 20 crore. Why we are deducting this 5 crore? Because it is an artificially added number. Artificially 5 crore was added here to compensate the 5 crore was added here. This is an artificial, this is not real number, Moganabir Kumar. So when it is not real, why I should consider? So I am removing that. I am removing that. Okay. So now I have the equity as 20. But earlier we said equity is 25. Is it not? We said equity is 25. Now I am saying equity is 20. Now I cannot use the same term equity, because equity is 25. I have altered it. So I don't want to call it as equity anymore. I'm going to call it as net worth. I'm going to call it as net worth. Please type net worth. Please type net worth if you are in sync. It means I have substituted equity with net worth in our analysis. Please type net worth. Come on, come on, come on. Type, type. When you type, no, you are learning. You are mingling yourself in the learning process. Okay? Or simply type NW also, like Shweta. Okay, so we have outside liability of 50 crore, which is untouched, but the equity got changed as net worth, which is 20 crore. Okay, so now we can do the comparison of only these two, that is outside liability with net worth. Earlier we compared outside liability with equity, now we'll compare it with net worth. So we will compare 50 with not 25 crore, we will compare 50 with 20 crore. So 50 by 20 means you are going to get a revised number which is 2.5, and it is 2.5 is to 1, yeah. 2.5 is to 1. Okay, the ratio got changed. It means what? When owners are contributing 1 rupee, the dependence on outsiders have increased to 2 rupee 50 paise. It means whenever this business is raising 1 rupee from owners, the borrowing from outsiders is 2 rupee 50 paise. This is the understanding required. It means whenever the business is raising 1 rupee from owners, there is a borrowing of 2 rupees 50 paise. It means whenever a business raises 3 rupee 50 paise, for that 250 out of 350 is going to come from outsiders, and 1 out of 350 is what coming from owners. Okay. So now this is going to send a very, very, very important message. Do you know what is that important message? Please tell me, what is 250 out of 350? What is the proportion? I think it is around 71%. It means what owners are contributing is 29%. Now it might look like nothing, but it's not nothing. Just look. Few minutes back, we thought owners were contributing 33% in the business, but now it has come to light that no, owners are not contributing 33. They are contributing only 29. Few minutes back, we thought this business is dependent on outsiders for 67%, but now we are getting a picture. No, this business is dependent on outsiders for 71% to run their show. 71% to run their show. Okay, now just tell me whether the business capital structure is moving in right direction or it is slightly moving in wrong direction. What is your opinion? Earlier, when the ratio was 2 is to 1, it felt somewhere good. But when the ratio increased to 2.5 is to 1, we are seeing that the stake of owners are coming down and the dependence on outsiders are going up. So in what direction it is going? Please tell me. Is it moving in right or wrong direction? Right or wrong direction? Sivakumar believes it is wrong direction. Jeevan believes it is wrong direction. What about others? See, I keep pesting you to comment now and then. Please don't get irritated with that. Okay, because that's how you are going to remember what you're going to learn in the session. Having trained 3 lakh plus people, I can tell you this will be in your memory for a longer time. Okay. Prashant, Jitendra, Ravindra. Okay, many of you believes yes, it is going in wrong direction. Yes, obviously it is going in wrong direction. But it is not yet over, guys. We have just scratched the layer. Unboxing number 1, we touched the layer. Unboxing 2, we scratched. Unboxing 3, 4, 5 are there. Same balance sheet, same company, not different balance sheet. Not different company, same company. We are digging deeper to find out what is the exact picture. Okay, this is only unboxing number 2. Let me take you through to unboxing number 3, where you will find something even more interesting. You will find something even more interesting. Okay, so I'll call this as unboxing number 3. It means I'm going to cull out some more information which is sitting inside the financial statements itself. That is, I told you this non-current asset also includes software. Did I told you? Yes. I mentioned about software. We discussed whether it is tangible or intangible. Okay. Yeah. So this also included software. So let me put that here. They had software. I'm writing here on the left hand side bottom. Okay. They had software. The investments what they have made in software is around 8 crore. They have made some substantial investment in software ERP to streamline the process, to strengthen the core of the business, to improve their efficiency and to make more profit. Okay, so this was their agenda or objective while creating the software, while spending a lot of money on the software. Okay, and they felt that this 8 crore investment will give them substantial benefit in their future, so they have treated the software as a long-term asset. Okay, now let me take you to that worst case scenario. Worst case scenario, that is, imagine this business is getting closed because the business model failed, business collapses, and business is getting closed. If that happens, what will be the next course of action? They will take the assets, they will sell them, they will take these assets, they will sell them. So, with whatever the sales realization that is coming in, they will settle the outside liabilities. After settling outside liabilities, if anything is left over, that will be given to the owners. Again, I repeat, when the business is closed, they will take all the assets, they will sell them. With that, first they have to settle the outside liability. After settling them, if anything is available, then it will be given to owners. This is the normal situation. Okay. Now, in this company, when they are selling each and every item, when they are taking stock of each and every item, they will also see there is a software where the company has invested around 8 crore. The software is uniquely created for the company as per their internal structure processes. Do you think this company will be able to sell this software in the market and recover that 8 crore money? Do you think this company will be able to sell this software in the market and recover that 8 crore? Yes or no? Answer is absolute no. Software is an asset only when the company is continuing its operation. When the company is closed, software is no more an asset. It means this 8 crore is as good as loss for the company. This 8 crore is not recoverable. It is not recoverable. So, why to realize that this 8 crore has no value only in the event of default? Why to recognize that loss only when the company collapses? Anyhow, this 8 crore in no occasion will fetch any money. Even when the company is running, if they try to sell that 8 crore, will it get any money? Answer is no. Since it is not going to give any money at any point, why to treat it as an asset? So, what the banks and financial institutions will do, whenever they see intangible asset, and if they are sure that these intangible assets will not realize any money if they are sold in the market or if they attempt to sell in the market, if they are sure that it will not fetch any money, then they will ignore those intangible assets also. They will ignore those intangible assets. It means the 8 crore included here will be altogether ignored. If you are ignoring the 8 crore here, then to balance the balance sheet, you have to ignore somewhere from here also. You cannot touch any of these items because these are real liabilities. So you have to put the burden only on the owner's head. On owner's claimant money, you can adjust this. See, again, I'm telling you, you are excluding 8 crore because it has no realizable value. It has no realizable value. Since you are excluding 8 crore here, you have to exclude here also. You cannot touch any of these. So, where you can adjust that 8 crore, do we have space to adjust that 8 crore? Answer is yes. Because already they had 10 plus 15, 25 crore, but from 25 we have already deducted 5, it is 20 crore. From 20, we can deduct 8, which is basically investment in intangible asset. It means the net worth, what we calculated as 20 crore, is now going to become 12 crore. Is now going to become 12 crore. Okay. If this resonates with you, please type 12. So I will go ahead and modify this 20 crore as 12 crore. If this resonates with you, please type 12. Means I will modify this 20 crore as 12 crore. Yes, it's time for us to modify that. That is, originally we had equity. Originally we had equity of 25. From that we deducted 5 and we landed in net worth of 20. Now we are deducting intangible asset of 8 and we are landing in 12. Okay. See, this net worth of 20 crore included this 8 crore, which is an intangible item. Now what we are having is a net worth without intangible item. Now what we are having is net worth without intangible item. If this 12 crore is a net worth without intangible item, then I think I can call this net worth as tangible net worth because no intangible items are here. Shall I call this as tangible net worth? If that is okay for you, please type T and W. Very important term. TNW. That is, I am going to call this net worth of 12 crore as what is known as tangible net worth. I'm calling it as tangible net worth. In short, I'm going to call it as what? TNW. I'm calling it as TNW. Is it okay for you? Yes. This 12 crore is nothing but tangible net worth, TNW of the business. And let us also look at this outside liability, 50 crore. How we have arrived at this 50 crore? We have arrived at this 50 crore by adding these liabilities, 25 plus 10 plus 15. So this 50 crore is nothing but total of outside liabilities. Yes or no? So I wish to rename this as total outside liabilities. I wish to rename this as total outside liabilities. If you are in sync with that, if you are in sync with that, type TOL. Type TOL if you are in sync with that. Total outside liability. So we have total outside liability of 50 crore. We have tangible net worth of 12 crore. Okay. Now let's continue with our analysis. Let's continue with our analysis. So 50 crore is real. There is no change. What undergone change is this owner's money. When owners contributed, we thought it was 25 crore. We deducted the revaluation reserve 5 crore. We landed in 20 crore. Now we have deducted the intangible asset of 8 crore. So what we have is a tangible net worth of 12 crore. And that 12 crore is compared with the total outside liability. It's same. I just renamed it. Instead of simply saying outside liability, I'm saying total outside liability. So I'm using the short form called TOL for this. And for the right hand side, I'm using TNW. So 50 crore is now compared with 12 crore. 50 crore compared with 12 crore. And please tell me what is the ratio now? 50 divided by 12. And the ratio works out to 4.17, Tushant. The ratio works out to 4.17. 50 divided by 12, the ratio is 4.17 is to 1. Oh my God, see where the ratio has moved. In this business, whenever, see, so now what is the understanding? In this business, whenever the owners are contributing 1 rupee, there is an outside borrowings of 4 rupees 17 paise. Are you able to see this big picture? Whenever the owners are contributing 1 rupee, there is an outside borrowing of 4 rupees 17 paise. It means both put together, whenever this business raises 1 plus 4.17, 5.17, that is 4.17 plus 1. 5.17. Whenever this business raises 5 rupees 17 paise, 417 out of 517 is coming from outsiders, and 1 out of 517 is what coming from owners. So 417 out of 517 means what is the outsiders' contribution in this business? Outsiders are contributing 81%, and 1 out of 517 means owners are contributing 19 percentage. Owners are contributing 19 percentage. Just see from where we started and where we have reached. We thought owners were contributing 33. Then that understanding shattered to 29, and now it has come down to 19. Same balance sheet. Our perception is changing when we start doing deeper analysis. Initially, we thought this is true, but then we were informed, no, this can be. Now we have the picture, no, this is the ultimate reality. We thought they are dependent on outsiders only for 67, but now it has increased to 71 and it is whopping 81 percentage. Tell me in what direction this business is going, the capital structure. Is it going in good direction or bad direction? Is it going in right direction or wrong direction? Come on, tell me. Everyone, participate. It's going absolutely in bad direction. Why? The dependence on outsiders are increasing and the contribution, the understood contribution by the owners are coming down. See, we thought owners contributed 25 crore. Yes, they did. But is it there in existence? No. Out of 25, 5 crore is only an opinion, is only an estimate. So it has come down to 20. Out of 20, 8 crore already has gone out in the name of software. So it is only 12. So this is the state of shock we carry now. So when we look at the ratio of 4.17 is to 1, what we infer? 81% dependence on outsiders and 19% is what owners have contributed in the business. And this is unboxing number 3. Unboxing number 3. And I can tell you there can be unboxing number 4, unboxing number 5 that will strip the business. That will reveal what the balance sheet is revealing, not revealing on the face. That will reveal what a normal layman cannot find out. Are you ready for that? If you're ready, just type B4. It means we are going to do unboxing number 4. Type B4 if you're really eager to learn, if you're really curious to learn what is still hiding in this balance sheet. What is still hiding? What they are still concealing? Not revealed on the face. Okay, I could see so many of you are really excited about that. Yes, so let's move on to that. We will do unboxing number 4 now. We will do unboxing number 4. See, I told you this company has made some strategic investment. Yes or no? They have invested in another company also. What was the name of that company, if you remember? They have invested in another company also. Yes, they have invested in another company called Y Limited. Okay. So this company has invested in another company. So there's a subject company. What we are discussing is X Limited. This X Limited has invested, let's say, 5 crore in another company called Y Limited. And in the beginning itself, I told you this investment was done with an intention to control the other company, is done with an intention, to uh, control the company, let's say to make decisions, to participate in decision making, and they have more than 51% shares, all this. Okay. So we all agreed that it is a long-term investment. It is a long-term investment. Now just answer me just one question. Yes, we all agreed the long-term investment. It means the 5 crore what they have invested in Y Limited, the 5 crore invested by X Limited in Y Limited will come back to X Limited or will not come back to X Limited, will not come back. What is your thought? Do you think this 5 crore invested in Y Limited will come back? Maybe the next year, the Y Limited takes a decision to repay 5 crore. Will that ever happen? Will that ever happen? Will Y Limited ever take a decision that, okay, take your money back? No, because the Y Limited is itself the another phase of X Limited. Guys, please understand the Y Limited is nothing but another phase of X Limited. As good as another branch of X Limited, but it has a separate legal form. It has legal identity. So the possibility Y Limited returning 5 crore to X Limited is very remote unless and until X Limited sells this 5 crore to somebody else, sells to someone else. Are you guys with me? So the probability Y Limited paying back 5 crore to X Limited is ruled out because it is an investment. If it is a loan, we can say it may come back. Are you all with me? If X Limited had given a loan of 5 crore to Y Limited, then there is a possibility we can say that money can come back 3 years from now, 5 years from now, like that. But this is an investment. Investment repayment of the invested capital by Y Limited is possible only through buyback arrangement. And those possibilities are very, very remote. It means we can more or less say this money will not come back. This money will not come back. Why? It is a permanent investment. It is a permanent investment. It means as far as the X Limited is concerned, the 5 crore which is sitting inside this non-current asset is only in the form of a paper, which is basically the share certificate for 5 crore. No physical assets, no tangible assets. It is only the paper saying you are holding the share capital worth 5 crore of Y Limited. No land, building, machinery, nothing. Okay. And that money is also not likely to come back in any near term. It is as good as money gone out of the company. It is as good as money gone out of the company. It is still in the balance sheet, But if you ask where it is only a paper. Okay. So what most of the banks will do, no? Whenever they see there is such a kind of investment in another company, in this model, they will conclude that money will not come back. Why? It is called as conservative assumption. They want to play very conservative. They want to play safe. They don't want to be dependent on paper asset. Here, the 5 crore is available only in terms of paper, not in terms of any land or building or machinery. So they don't want to be dependent on paper asset. So they will conclude that that money will not come back. So what will be the impact? What will be the impact if they conclude in such a way? Just few minutes back, we calculated TOL by TNW. What was TOL? 50. What is TNW? 12. If that 5 crore is concluded as not recoverable, you have to go and adjust somewhere. Yes or no? Where will you adjust? Whenever we are ignoring some item in the asset side, where we are adjusting? Whenever we are ignoring some item on the asset side, when we ignore the land, when we ignore the software, what we did? We went and adjusted against this. Okay. In the same way, if we conclude that 5 crore is not recoverable, what we have to do? We have to go and adjust it from the net worth, from the equity. Equity got renamed as net worth got renamed as tangible net worth. So from the tangible net worth, we have to deduct that 5 crore. If I do that, you see what happens now. That is 50 divided by 7. 50 divided by 7. And you are going to get the ratio as 7.14 is to 1. You're going to get the ratio as 7.14 is to 1. How you got this ratio? You took the TOL, you compared it with the TNW, but it is not the same TNW because the original TNW is 12. What you have is adjusted TNW. So I wish to call this as adjusted TNW. So you took the TOL 50 crore, you compared it with the adjusted TNW of 7 crore, and now you have the ratio as 7.14 is to 1. Now tell me, if you are a banker, will you fund this company? Will you fund this company? The company which had a debt equity ratio of 2 is to 1, which got increased to 2.5, then later increased to 4.17, and now it is showing the real phase, it is 7.14. Will you fund this company? Yes. I could see answers coming from Shweta, no. Chandan, no. Jitendra, no. Kanchu, Kanchu Charan Sahu, Miji, Jeevan, Ashu, Hariharan. Come on, everyone, please participate, because this is where the key learning is. Ashu, Prashant, Shaktivel, I could see so many of you are saying no at this juncture. So many of you are saying no at this juncture. Sunita, Shaktivel, Deepthi, but my answer is you should not come to the final conclusion just by looking at this ratio. Guys, you should not come to the final conclusion just by looking at this ratio. See, you are saying the company is having a capital structure ratio of 7.14 is to 1, which is unacceptable, intolerable. Why? Because for every 1 rupee of owner's contribution, there is an outside borrowings of 7 rupee 14 paise. Then, few minutes back, we calculated TOL by TNW, where the ratio was 4.17 is to 1. But now we have another ratio called TOL by adjusted TNW. So first of all, tell me which ratio we have to use for taking final decision. If you believe this ratio, type 1. If you believe this ratio, type 2. Which ratio we have to use for taking final decision? Should we base our final decision based on TOL by TNW 4.17, or should we base our final decision based on TOL by adjusted TNW, which is 7.14? Which ratio we have to use? Some are saying 1, some are saying 2. Come on, guys, participate, because this is where your key learning is now. When the ratio is 4.17, even that was high, but when the ratio is 7.14, that looks like extremely high, extremely risky. Most of the times you will get inclined towards ratio 2. TOL by adjusted TNW. But my friends, all of you, I'm telling you, this is not how it works in reality. Yes, it will not work in this way in reality. Actually, in real life, you have to calculate both the ratios. That is, you have to calculate TOL by TNW. You have to calculate TOL by adjusted TNW also. You have to calculate both the ratios. And in certain occasions, okay, I'll say occasion one. In certain occasion, you may take your final decision based on this. In certain occasion, I'll call this as occasion two. In certain occasions, you may take your final decision only on the basis of this. That is, you will have both the ratios in front of you. You will have both the ratios in front of you. And let me also give you a scenario like this. You will have both the ratios. In our case, it was 4.17 is to 1 and 7 point, how much? 14 is to 1. In certain cases, you may have to go ahead with this. In certain scenarios, you may have to go ahead with this. That is, in certain scenario, you have to go ahead with this despite knowing this is their TOL by adjusted TNW. In certain scenarios, you have to go ahead with this despite knowing TOL by adjusted TNW is 4.17. Okay. It means there is no one set of approach for this. You have to go on case to case basis, but there should be a reason. I told you, in certain occasions you have to go for this, in certain occasions you have to go for this. It means there should be a valid reason why you have to go and select this or select this. When you are supposed to choose this, if you end up choosing this, then you are taking wrong financial decision. And when you are supposed to choose this, and if you are focusing on this, it means you are missing an opportunity. Understand the difference. When you are supposed to take your decision based on this ratio, but if you are taking based on this, then you are taking wrong financial decision. It can have significant economic damages. And when you are supposed to take decision based on this and not based on this, and if you are missing out that, then you are missing a business potential, business opportunity, growth opportunity. Okay. So how many of you want to learn all this? How many of you are really curious to learn this? Not just this, many of the matters like this in the world of banking, credit, and finance. If you are really curious, just type learn more. Just type learn more if you are really curious. Again, I'm telling you, in certain occasions, you are supposed to take decision based on this. If you take decision based on this, you will be finished. In certain occasions, you are supposed to take decision based on this. But if you put your focus on here, you lost an opportunity, a business potential, a growth potential. Okay. So what this tells us is what we have seen today is only the tip of the iceberg, because I told you we just started touching the surface, scratching the surface. We just got a little deeper, and now we have come to a stage that we have this realization we have to learn more. Yes, we have to learn more. We have to learn more and just follow this. See, you guys started your career. Many of you have started your career as banker or as a finance executive. I don't know any business owners are here, but some of you as business owner. But like today, which showed you that you have to learn more, deep inside, in many occasions, you would have realized that, yes, you still have a lot to learn, right? How many of you still carry the feel that, yes, I got to learn more? I have learned so many things. I've completed my school, college, I have come here, but still I have to learn more. Yes. And today's session is an example for that. So, what is the way out for this? Maybe go back to college, but I don't think all of us have that financial freedom to go back. So, what is the other way? Pursue an executive MBA program. Ready to spend 10 to 15 lakhs? If you're ready for that, go. But even if you go for an executive MBA program, I can tell you, because last week I had a discussion with a state head of a financial corporation of Maharashtra, where people are coming after pursuing an MBA program, but they're coming and struggling here because what they have learned is raw academics, and what is expected in the industry is altogether different, and they regret for having spent so many lakhs. Okay, so even if you go and pursue an MBA program, ensure you have to attend all the classes, you understand when they are taught, and if you don't understand or if you're missing the class, everything is over. So what people will look for, especially working professionals, they will start looking for online courses. Even we do provide online courses, but many of the online courses outside are expensive. They provide only recorded videos, and it will be for a limited period. Like they'll give you few months subscription, and the access once expired, the learning will stop. So this gives rise to the question like, should I have to keep buying course after course? Or should I have to start my learning from zero always? Is there no other better way to add value, to improve ourselves? So the problem here is your learning is not supposed to stop, is it not? We all put full stop to our learning process after our graduation, but that's where we are supposed to start. Till graduation, if you have learned something, means you just got an entry pass for the real world. When you get into the real world, you have to learn what is required for the real world. But what we do exactly at the time, we will say, I will learn from my experience. Learning from experience is good, but it is going to take hell a lot of years and costly mistakes. So, what is the way out if your learning never had to stop? Because you have to study throughout your career. You have another 30 to 40 years of career span, and you cannot go and find an institution, and you cannot go and lock yourself everywhere for 2 to 3 years. You have to earn. So what is the way out? Because your learning is not for 1 or 2 years, but it has got to be continuous. If you want to grow, you have to learn. Okay, it's a lifelong process. Please, all of you, realize that you have reached a stage where you are in lifelong learning phase. Never ever think that whatever you have learned so far will take you further. No, whatever you have learned so far has brought you till this point. If you want to move further, you have to learn further. So what if one platform can give solution for all this? That is, you want to learn through courses, you want to learn through live classes, you want to learn through reading materials, you want to learn on a daily basis through updates and developments, you want to have case studies templates. What if one platform can do all this? Is it first of all humanly possible? Yes, that's what we are doing it for past 1.5 years. Yes, with that intention only, we created this membership program called Diamond Membership. It is possible. This Diamond Membership is not just another course. Please be clear, it is not another course. It is a continuous learning ecosystem for banking and finance professionals and business owners who are serious about their business numbers. This membership program will give you access to 130 plus banking, credit and finance and accounting oriented courses. It will give you access to 150 plus ebooks. It will give you access to all the templates and case studies we have created. And the top notch benefit is it will give you access to all the live classes. Whatever the live classes we have conducted in the past, whatever we are going to conduct in future, you will get access to all of them. You will learn them live. Today you sat here for 60 minutes non-stop. You are learning, right? Your knowledge, I believe. I mean, all of you would have got that sense of satisfaction that, hey, I'm learning something. Okay, just imagine you can attend several of similar sessions, and you will get continuous updates on a daily basis in your mobile. Yes, our diamond members will have access to 6 daily learning updates every day morning, 6 a.m., 8 a.m., 11 a.m., then noon, evening, like that. In 6 intervals you will get different type of learning resources. A constant exposure to updates will also ensure you are continuously learning. Okay. So it's for this purpose we have created this membership program. We have created this membership program. And as I told you, you will also get access to a special community in Telegram where at 6 intervals, you will get 6 different types of learning updates. You will get 6 different types of learning updates. Okay. So with all this intention only, we have created this membership community called Diamond Live Membership. Close to 2,500 learners have already upgraded to Diamond membership program. They are banking professionals, finance professionals, business owners. They are learning on a daily basis through updates, through live classes, through courses, through ebooks, through various educational resources. If today's session added value for you, and if you want to learn continuously in future also, see, one of the topmost benefit of Diamond membership is you will also get access to all the future publications. That is, in future, if we are going to come out with courses, ebooks, templates, test series, short lessons, live classes, you will get access to them by becoming a Diamond member. That's why we named it as Diamond, the ultimate. Okay. So if today's session added value, and if you want to grow every day and lead tomorrow, I invite you to Diamond membership program. So how to get into this Diamond membership program? It's very simple. Open your mobile, open your WhatsApp and type this number. All of you, open your mobile, open your WhatsApp and type this number 90251 00249 and send me a message called Sunday Diamond. It means you are sending me this message after attending the workshop, so that will make you eligible for an additional discount. Okay, that's what the Sunday Diamond means. Okay, so open your mobile, type the number, or if you are attending the session in your mobile, kindly check the chat section. I have placed a link. If you are attending the session in your mobile, kindly check the chat section. I have placed a link. If you click that link, it will automatically open your WhatsApp. It will have the message ready typed as Sunday Diamond. Send me that message if you are really serious about your career growth. If you have already enrolled in one of our course, just remember you have just enrolled in one course. What you need is a continuous learning ecosystem. On a daily basis, exposure to small amount of learnings. On a weekly basis, live classes, a valuable reading resources, a platform where you can ask your doubts, and everything is provided through this Diamond membership. Everything is provided through this Diamond membership. Okay. So whoever have derived value in today's session, whoever want to take this to the next level, whoever want to take this to the next level, if you felt like, yes, today I had a wow of learning, I want to learn like this in a better way so that I can improve my career, I can improve my future earning potential, I can become a most resourceful person in my organization, I can add value to the organization. So if that is your standpoint, then make use of this opportunity. Yes, I already received message from Vivek, Tushant, Vishal. I also received message from participant from Central Bank. I missed your name. Ashu, thoroughly enjoyed the session. Go ahead and drop me the message. Everyone, Shweta, I just received your message. And to all of you, one more thing I just want to tell you. We are continuously adding valuable resources into this Diamond membership. On a daily basis, on a weekly basis, we are adding so much of educational resources. So the message is gradually, week after week, the fee for the membership will increase. So now I'm going to give you an offer which you should not miss, because if you miss this week and if you come back next week, obviously the fee will be higher. And the fee is increasing week after week. Whoever have attempted earlier could not enroll will vouch for it. By now, when they see, the fee would have increased substantially. Okay. But I'm going to give you a special offer now because you guys have attended this session. You stayed till this end. It means you are really serious, right? Okay. So 79709. What's your good name? Please let me know so I can send you the details. And here we go. See, first I will tell you what is the normal offer we have for Diamond membership. What is the normal offer? But since you guys have enrolled in one of our course, Ashu, okay, Ashu Pandir. Yeah, Ashu. I'm just sending you what is the normal offer, but don't worry. Since you have enrolled in one of our course, I'm going to give you that special offer. If you're enrolling now, you can enroll at a special price, which is exclusively available for the existing learners. Okay. So Ashu, kindly check your WhatsApp. I have sent you that special offer. I have sent you that special offer. And Vivek, I've just received your message, Vivek. Vivek, how was the session? Did you enjoy it? Did you had that wow moment? Did you derive value? If yes, Vivek, here we go. This is the normal offer we have for Diamond membership. This is the normal offer. But if you are joining now, I can arrange a special offer using which you can join for the special offer price. You can join at the special offer price. Vivek, check your WhatsApp. I'm sending you the details now. Check your WhatsApp. I'm sending you the details. And whoever really derived value in today's session, click that link and send me the generated message. Click that link and send me the generated message. And I also got message from MVK. MVK, I could see you have already enrolled in Diamond membership. Please confirm, are you referring to Diamond membership? Yes, Ashu, you have paid 2499 today only. That's why you got that discounted price. Did you notice? Did you notice what is the price of the Diamond membership? Ashu, the price of the Diamond membership is 19,990. If your fee is adjusted, the ideal offer price is 17,500 approx. Kindly check what is the offer you have received. Kindly check what is the offer you have received. If the offer, the price is lesser, it means you got an additional discount. Tushant Shekhar. Tushant Shekhar, we just received your message. Tushant, here we go. Tushant, this is our normal offer. This is our normal offer. But if you are joining now, Tushant, we can arrange a special offer with a deep discount. Tushant, are you ready for that special offer? If yes, here we go, Tushant. If you are joining now, right now, you can join at this special offer price. You can join at the special offer price. Tushant, kindly check your WhatsApp. We have sent you that special offer. And MVK, please let me know. MVK, are you referring to Diamond membership? I don't know what's your full form. I just see the name as MVK. And Vishal Sahu. Vishal Sahu, we just received your message. Ashu, did you got that clarity? And Vishal Sahu, here we go. Vishal, this is our normal offer for Diamond membership. This is our normal offer. But if you are joining now, we are ready to provide you special offer. Yes, Ashu, go ahead, complete the payment and share me the payment proof. If you enjoyed the session, then invest in yourself. And this offer is available now only, guys. This offer is available only for webinar attendees and it will be available only during the webinar. Okay. Ashu, if you are facing challenge, let me know. The offer is available now only. To all of you, I'm telling you, the offer is available now. Once the session is over, the offer will also expire. Okay. Yeah. Vishal, this is the normal offer we have for Diamond membership. But if today's session has added value for you, then you can avail this special offer. Okay. So this is the offer we have for you now. If today's session added value, you can join at the special price. You can join at the special price. Go for it, complete the payment and share me the payment proof. Yes, Ashu, the offer is available right now, not after the class, right now. And yes, we have the participant from Central Bank. Yes, you can directly join through this link. We have given you the offer. Just click the link. It will take you to the payment gateway. Complete the payment and share us the payment proof. Immediately, we will be arranging the access. And Shweta, I'm sorry, I'm just sending you. I kept you waiting. Apologies for that. Shweta, here we go. This is our normal offer. This is our normal offer. But if you are joining now, Shweta, we have that special offer for you. Okay, so if you are joining now, you can join at this special offer price. Shweta, this is the offer available now. Okay, and kindly note the offer is available now only, not anytime later. You can directly join through this link, Shweta. Click that link, it will take you to the payment gateway. And Durga Srinivas, yes, we got your message. Durga, here we go. Durga, first let me tell you what is the normal offer for the diamond membership, because you should know what is that additional discount you are getting by availing this offer by staying till end of the session. So Durga, this is the normal offer we have for diamond membership. But if you are joining now, I can arrange you a special discount, and this is the discount available for you now. If you're joining now, you can join at the special price. It means you can get lifetime membership at the special offer price. Okay. And I just got the message from Ashu. Ashu, can you just put the payment proof here on the screen? In WhatsApp, let us all put our hands together to congratulate and welcome Ashu for acting so swiftly and getting into the membership program. Ashu, just share us the payment proof so immediately we can arrange for the access. Okay, so you have completed the payment. You are ready to get the confirmation. Let me just check my payment gateway as well. Just give me a moment. If you have done the payment, don't worry, it will come to us automatically. Yes, Ashu, congratulations. We have received your payment. We have successfully received your payment. And can you please confirm your email ID? And before that, let us all put our hands together to congratulate and welcome Ashu for completing the payment and getting into the registration. Ashu, we are going to upgrade you as our diamond learner. As our diamond learner, just have an eye on the inbox. Just have an eye on the inbox. I'm going to add you now. You will get the confirmation shortly. You will get the confirmation shortly. And here we go. Congratulations, Ashu. We are adding you as a diamond member. You will be getting the confirmation message shortly in your WhatsApp. Kindly check. You will also get the confirmation message in your email. Yes, Ashu. Yes, you got the confirmation message. Yes, congratulations and warm welcome to Diamond Membership community. So today onwards, you are our esteemed diamond member. It means you are going to have access to all the publications we have published so far. And you can attend all our live classes, and you have an assurance of unlimited access to all our future publications. And on a daily basis, you are going to get six educational updates in your mobile every day. Okay. So congratulations and warm welcome. And Kanhu Charan, we just received your message, Kanhu. Okay, so Kanhu, here we go. This is our normal offer for diamond membership. This is our normal offer for diamond membership. And if you're joining now, you are going to get that special offer. And what is that special offer? So just check your WhatsApp. If you're going to join now, you will be able to get into diamond membership at the special offer price. Yes, Kanhu, it's a one-time payment, and what you're going to get is lifetime membership. Lifetime membership. Okay, so go for it, complete the payment, and share me the payment proof. And Ashu, we have a private community in Telegram. 24 by 7 it works. You can ask all your queries there. We have created a mentor support system, so our mentors will review your queries. It will come to me for final approval, and you will get detailed reply. Okay, for each and every query you can make use of our exclusive telegram community. Okay. And Kanhu Charan, I hope you have received the offer details. And Vishal, we have sent you the details now. Kindly check. The offer what you have received now is the lowest offer price for Diamond membership. We do run some special campaigns for Diamond membership, but the offer what you guys have received is very special because you have demonstrated that you want to learn. You stayed till the end of the session. You have shown that you are really serious, And that's why you have this offer in front of you right now. Okay. So go ahead, complete the payment and share me the payment proof. Yes, Kasumela, we just received your message. Are you in the session? Just let me know so that I can send you that special offer. So the normal offer price is 19,990, and when you are already enrolled in our course, you get that special offer, right? So here we go. This is the special offer we have for you. This is the special offer we have for you. Go ahead, complete the payment and share me the payment proof. Share me the payment proof. Did any of you drop me a message but did not receive any reply from my side? And Shweta, you are very, very keen on joining the membership. Are you able to complete the payment? If you're done, kindly share me the payment proof. If you're done, kindly share me the payment proof. And whoever have initiated, whoever in the process of enrolling, keep me in loop. Keep me in loop. And MVK, okay, you are interested in diamond membership. You responded saying Sunday diamond, and there is a confusion. Please finalize one thing and let me know which course you want to join. Diamond membership. I have explained what is diamond membership, is it not? What is diamond membership? It's a membership program that's going to give you access to all our publications. There are 130 plus courses, 150 plus ebooks. There are several live classes, past and future. I mean, you can attend all the future live classes. You can go through all the past live classes. You will get daily continuous updates, daily basis learning. You will get access to templates, case studies, whatever we have created. Okay. So what kind of transformation you want? Do you want to stuck and remain in the same position, or you want to transform by making yourself as more knowledgeable and person with more skills? Decide that and go ahead and take that decision. Okay. So again, I'm telling you, if today's session added value for you, if today's session added value for you, if you had that wow moment, and if you are sure that you have to learn more if you want to really progress in your career. See, you cannot expect the different result in your life by doing the same things again and again. By doing the same things again and again, don't expect a different result. Don't expect a better performance from your side with the same level of knowledge, with the same skill. If you want to grow, especially people who are in banking, if you want to grow in banking career, you have to master the core of the banking business, not any specialized areas. What is the core of the banking? What is the core? It is lending. It is loans and advances, right? Unless and until you master the core of banking, whatever the specialization you garner from the other side, that will not take you to the top. If you want to really grow, if you want to really become a master, then you have to understand what is the core. You have to take all steps to acquire that core skill. Okay. So that's why you have this special offer. And whoever have initiated the registration, keep me in loop. So I could see Vivek, I could see Vishal. Yes, Vishal, yeah, coming back to you. Yes, Vishal, Diamond is ultimate membership. So it will be relevant for bankers, it will be relevant for finance professionals, it will be relevant for business owners because it has so many contents and you can choose. I mean, if you're coming from banking background, choose what you want. If you are a finance background person, choose what you want. Okay. So that flexibility is also there. Why we call it as Diamond Ultimate Membership? Because it covers all our publications. Okay. And Durga Srinivas. Durga Srinivas, let us not talk about other things here. The offer you have is for diamond membership. Okay. So if you're serious and curious for diamond membership, we have given you that special offer. Yes. Yeah. Vishal, so did I answer your question? Prashant, kindly drop me a message in WhatsApp. Kindly drop me a message in WhatsApp. And Vishal, I don't know whether you are from banking or finance. Whichever, you should go for this. Why? Because it has both the contents. And Shweta, yes. You are serious? Okay. Use the link, or you can use this link also. You can use this link also. Go ahead, complete the payment and share me the payment proof. Okay. In this link, you can make the payment. In the purpose, just mention it as diamond membership. Vishal, in purpose, just mention it as diamond membership. Shweta, click that link. It will take you to the payment gateway. You can make the payment, or you can directly use the membership link, which I shared with you in the beginning. Got it? Yeah. Anybody else drop me a message? I have not replied. Please let me know. And Vivek, are you here? Vivek, kindly check your WhatsApp. And whoever have completed the payment also, just keep me informed. I think Shweta, Vishal. Yes, let us all put our hands together to congratulate Vishal as well as Shweta. We have received your payments. We have received your payments and congratulations. Vishal, can you please confirm your email ID so I can immediately add you into the program? And Shweta, I think you have directly joined through the membership link. It means automatically the membership is activated for you. Just have an eye on the inbox as well as your WhatsApp. So, Vishal, congratulations. Your membership is activated and you got the acknowledgement message also. And Shweta, congratulations. Your membership is activated. You also received acknowledgement message. So, whoever have made the payment and got into membership, you will be receiving 5 messages in your WhatsApp. Okay. Message one is just an welcome and acknowledgement message, but message two is very important. It will have a guidance video. I repeat, message two will have a guidance video. It will be like 8 to 9 minutes guidance video explaining you what is diamond membership, how you have to navigate and how you have to get the best out of diamond membership. Got it? So kindly watch that guidance video fully. Yes, Shweta? Yeah, thank you and appreciate it. So make sure you watch that guidance video fully, and whoever have already enrolled now, you can even sign off the session because the guidance video will guide you further. I'll be appearing in the guidance video once again, and you will get almost a kind of a hand-holding guidance. Okay. Yes, we shall go through that guidance video. Okay. And all of you will be getting access to 2 Telegram communities. Okay. One Telegram community is exclusively for doubt clearance. The other Telegram community is for six learnings per day. I told you, you will be getting 6 learnings starting from morning 6 a.m. till 8 p.m. They will be like micro bite-sized learning daily basis, but it will be something very valuable, very important for your career. Okay. So uh, enjoy them, and we will meet in several live classes in future. Okay. And Prashant, yes, Prashant, I just received your message. Prashant, here we go. Prashant, this is our normal offer for diamond membership. Okay. But if you are joining now, I can give you this special offer. Since you have attended the session, I can give you the special offer. So click the link. It will take you to the membership page where you can make the payment and immediately you can become our diamond member. Okay. Prashant? Prashant, have you received the offer? Can you please confirm? And whoever received the offer, Yes, Vishal, you will get certification also for each and every course. When you complete the course, you will get certification also. Okay. Prashant, and I hope you have the picture of the diamond membership. Just look at the screen. It's 130 plus courses, 150 plus ebooks, templates, case studies, live classes, continuous updates. And there is a very important support community in Telegram. Okay, so any doubts, any questions you ask, we have mentor support system, we have mentors. They will go through your query and they will come out with an amazing reply with the detailed insights. There are many learners who are thriving with that. Okay, they are actually doing their even their job with the support community. I mean, with the help of the support community. Okay, so Prashant, go ahead and share me the payment proof. If you wish to pay through any other alternate options, I mean, not directly through the course link, but if you want to pay through any other options like Google Pay or debit card or credit card, also you can let us know so we can arrange an alternate option for you. And Vivek, if you are present, kindly check. And Durga, sorry, Kanhu Charan Sahu, are you able to check? Did you receive the offer? See, if any of you are not in a position to make the full fee now, but you want to make payment in parts, like make payment in one part, I mean, two part or three parts, that flexibility is also available. Okay. So we can give you two options. Kindly check your WhatsApp. Kindly check your WhatsApp. Kanhu Charan, check your WhatsApp. Tushant, are you here? Tushant, kindly check your WhatsApp. Kindly respond to that to unlock. Okay, Kanhu, if you are joining now, you can join at the special price. Okay, so here we go. Kanhu, kindly check. Kindly check. And Tushant, let us know. You have an option. You have an option. And Ashu, I hope you have gone through all. Kindly go through the video. Okay. Kanhu, can you kindly confirm? Kindly confirm. Kanhu, that's for credit and financial analysis course. Yes, you can join at 4,999. We still have that offer. Diamond membership is different. You guys have to understand what is the difference between a course and diamond membership. I have explained. Diamond membership gives you access to courses, ebooks, live classes, templates, case studies, daily updates, and assurance of unlimited access to future courses as well. And today by 3 p.m., we also have a session related to term loan and project finance. If any of you are really serious about learning them, I invite you to attend that session as well. It will be a kind of Q&A model session where certain frequently asked questions in project finance will be addressed in that session. Okay. So if you guys are available, kindly attend that session also. You will get a lot of inputs. And Krishna Chandra Ruth, are you really serious about Diamond membership? Can you please drop me a message in WhatsApp? I have given you a link, right? If you click that link, what's your number? What's your number? I will put the link once again. Can you click this link and send me a message? Okay, if you've dropped me a message, let me check. Oh, I'm sorry, I missed your message. Okay. So here we go. Let me reveal what is the normal offer. So by now you have a picture of Diamond membership, right? So this is the normal offer we have for Diamond membership. And what it gives you, can you please check your WhatsApp? Yeah. So this is what you get with Diamond membership. And also understand what kind of problems it can solve. Okay, it is going to give you that knowledge resources through courses, live classes, daily exposures to continuous updates and ebooks, reading materials. It means it will make you as more knowledgeable, a resourceful person in your organization, and that will automatically help you to attract a better career growth, maybe within your organization or even moving and looking in outside organization. Okay, so this is the offer we have now. If you are joining now, we can arrange you this special offer. Okay, so if you're joining now, this is the offer. Just click that link, it will take you to payment gateway. It will take you to the membership program, and you will be able to join at that special offer price. Kanhu, I'm just coming to you. Kanhu, kindly respond to this message. Yeah, Kanhu, kindly check your WhatsApp now. Okay, Kanhu, go ahead, complete the payment and share us the payment proof with your email ID so immediately I can arrange access. And Krishna, did you receive the offer? Can you please confirm? Yes, you guys can leave. Yes. Only those who are joining can stay back, others can leave. The next session will start by 3 p.m. And who, if you're done, kindly share us the payment proof so immediately access can be arranged. Kanhu, congratulations. We have received your payment and we will be adding you into the membership now. Yes, here we go. Congratulations. We have successfully added you into the membership program, so you should be getting the acknowledgement message shortly. Yes, you got it. So congratulations once again. You will be getting 5 guidance messages now. You will be getting 5 guidance messages. Go through them, especially watch the guidance video. That's very important. Okay. Yeah. So it's our pleasure. So looking forward for more deep and immersive learning, kindly make best use of the Diamond membership. Go through many of the past live classes, and whenever we conduct live classes in future, please do attend. Please do attend. Okay. So thank you all. We'll meet once again by 3 p.m. Bye bye.